Welcome to Financial Literacy for Lawyers, Bridging Law and Business. I'm Professor Seth C. Oranburg, and together we're going to confront a myth that costs lawyers, clients, and businesses millions of dollars each year. There's a belief that financial statements and accounting documents are things lawyers can safely ignore. If you've ever thought, I'm a lawyer, not an accountant, what am I supposed to do with this balance sheet thing? You're not alone. But this mindset can lead to costly oversights, missed opportunities, and even professional pitfalls. Look, I get it. Numbers can feel overwhelming. They weren't a big part of law school. But don't worry. Together, we'll explore why understanding the basics of financial statements isn't just helpful. It's absolutely essential for modern legal practice. And we'll do it together, step by step, with simple analogies and real-world examples. You won't need a math or accounting degree to follow along. We'll focus on the business angles that matter most for lawyers. This podcast is for educational purposes only. For specific legal or financial advice, please consult qualified professionals. Imagine advising a client on a major litigation without reviewing any of the key evidence. Frankly, that's what it's like to be skipping over financial statements when you're dealing with transactions. Because these financial statements are the scoreboard of business reality. And together we'll understand how they reveal health, risks, and disputes before they escalate. Over the course of this study together, we'll build your confidence in your ability to read these financial statements like you read case law. I hope we'll turn some potential anxiety into a professional strength, which you can use to bridge legal advice with business decisions. Many legal professionals treat balance sheets, income statements, and statements of cash flows with some mix of indifference and dread. So the result is outsourcing financial understanding to accountants, or assuming these numbers are just someone else's responsibility. But the truth is, financial statements are the data trail behind every major business risk. They reveal the health of a company, the viability of a deal, and the potential for disputes long before they hit the courtroom. To put it simply, these documents provide a clear picture of a company's resources, obligations, and overall stability at any given time. You're missing a lot if you're not reading these documents. Consider this real-world scenario. A business client is about to sign a major contract, and their lawyer is in charge of the drafting. Well, the lawyer figures that someone else is reviewing the financials, and so they construct the deal. But months later, the client files for bankruptcy. All sorts of legal consequences cascade. There's claims of contract breach. There's inevitable litigation. And unfortunately, there's possible malpractice allegations too. Because in hindsight, the warning signs were clear. They were right there in the financials. And everybody missed them. And everybody's responsible. For instance, you might have discovered that a declining current ratio on the balance sheet could have signaled liquidity issues, which means the company didn't have enough short-term assets to cover immediate debts. Or unusual spikes in expenses on the income statement could have hinted at some underlying fraud, like costs being hidden or misallocated to inflate profits. Ignoring these isn't just an oversight. It can turn a routine transaction into an absolute nightmare. So think of financial statements like fine print. Skip them, and you run a lot of risks. The myth of financial illiteracy persists because law school curricula prioritize statutes and case law over balance sheets and profit margins. But in practice, especially in business law, the two can be inseparable. Clients don't operate in a vacuum. Their decisions are driven by dollars, and so are the risks that you advise them on. By not engaging with these numbers, a lawyer misses a chance to provide holistic advice that integrates legal and business perspectives. It's easy to think of financial illiteracy as harmless, and it's kind of, an embarrassing law school joke. But again, the costs are real, and they can be devastating. Lawyers who can't read financial statements tend to overlook warning signs of insolvency. They might fail to spot fraudulent financial reporting, or miss crucial elements in mergers, acquisitions, and even much more routine business deals and licenses. Insolvency isn't always obvious. It might show up in liabilities that quietly exceed assets over time, leading to creditor claims that could have been anticipated, and I would argue should be anticipated. A failure to catch a financial red flag can expose clients and lawyers to liability, and there are some notorious cases where law firms unwittingly approved deals built on manipulated earnings or undisclosed liabilities, which led to lawsuits and professional discipline. So take Enron as a prime example. The Houston-based law firm Vincent and Elkins served as Enron's primary outside counsel, and they were accused of aiding and abetting in the company's downfall by failing to respond to red flags in Enron's accounting practices. According to the 2003 Batson report, prepared by court-appointed examiner Neil Batson, there was sufficient evidence for a fact finder to conclude that the law firm of Vincent and Elkins committed malpractice based on negligence and aiding and abetting breaches of fiduciary duty by Enron officials. The report highlighted how the firm provided legal opinions that enabled problematic transactions, despite clear warning signs in the financial statements, such as off-balance sheet entities that hid massive debts. These entities, known as special purpose vehicles, were used to keep debt off the main balance sheet, and they artificially improved financial ratios. The scandal led to Enron's bankruptcy in 2001, and it wiped out $74 billion in shareholder value and thousands of job losses. Key executives like Jeffrey Skilling and Kenneth Lay were convicted of fraud and conspiracy, with Skilling serving 12 years in prison. The fallout was severe. In 2006, Vincent and Elkins agreed to a $30 million settlement with Enron's bankruptcy estate to avoid a lawsuit alleging they aided and abetted fraud. This included returning $10.5 million in legal fees, which were paid in the 3 months before Enron's bankruptcy, and waiving about $4 million in unpaid fees. The firm didn't admit wrongdoing, and partner Harry Reasoner stated that they met professional obligations and they settled to avoid burdensome litigation. However, the settlement didn't end their troubles. They remained defendants in a separate shareholder suit that sought billions. Even in the criminal trial of Enron executives Jeff Skilling and Ken Lay, Vincent and Elkins' internal probe into whistleblower Sharon Watkins' allegations was criticized as a whitewash. And by the way, none of this is good for your reputation. The case underscores a harsh reality. When unethical business practices become legal disasters, the dividing line is often found not in the text of a statute, but buried in the numbers. Similar issues have plagued other firms, like in the WorldCom scandal, where overlooked financial manipulation, where they capitalized $3.8 billion in routine expenses to temporarily inflate profits, that led to massive settlements and huge regulatory scrutiny. Again, the lesson is financial blind spots don't just harm clients. They can tarnish reputations and invite malpractice claims and ruin careers. By understanding financial documents, lawyers can identify inconsistencies early, advising clients on how to mitigate risks before they escalate. And frankly, it just makes you a better partner in the boardroom because you can have a conversation with your business partners in their language. So whether you're advising on entity selection or settling disputes or structuring transactions, nearly every area of business law is grounded in financial concepts. So we're going to break this down with examples to illustrate just how intertwined it all is, because my goal for this first episode is for you to see the practical connections for bridging law and business and choose to stick around for the rest. So let's consider entity selection. When helping a client choose between an LLC, a corporation, or a partnership, you need to evaluate tax implications, liability protections, funding needs. All these are visible in projected financial statements. A balance sheet showing high debt might favor an entity with better creditor protections, like a corporation that limits personal liability, while an income statement forecasting losses could influence a choice for a pass-through taxation vehicle, such as an LLC, where losses flow to owners' personal taxes. How about settling disputes, like partnership dissolution or shareholder disagreements? Well, once again, financials are key evidence. For instance, valuing a partner's buyout requires analyzing cash flows to determine fair consideration. Mass hidden liabilities in the balance sheet, like unreported debts or contingent claims, might make your settlement challengeable as inadequate and lead to further litigation. And even aside from these business disputes, most divorces involve many of these cases too. So even family law attorneys can really benefit from this class. Structuring transactions like mergers or acquisitions, once again, here the financial dimension is unavoidable. The test for solvency in a fraudulent conveyance claim, which is whether liabilities exceed assets, comes straight from the balance sheet, and it helps decide if a transfer can be clawed back. Regulatory enforcement, such as SEC investigations, often hinge on whether disclosures accurately reflect financial health, like if earnings were sustainably reported. Even in routine advice, like contract drafting, financial literacy shines through. A covenant requiring a certain debt to equity ratio protects lenders by ensuring the borrower maintains a healthy balance of debt to ownership stake. But if you draft this kind of provision without understanding what it means, or without understanding your own client's income statement, where revenue and expenses show profitability, that could lead to either unenforceable terms or terms that don't match business reality, or surprises for your client who expected you to be looking out for them. Competence isn't about becoming an accountant, and neither is this course. Competence is about recognizing when the numbers matter and how to ask the right questions, like, does this revenue spike align with cash flows? Because you might need to check if sales are real or inflated. And it's about giving advice to clients so they can rely on you when dollars and rights are at stake. Analogies might help here. You can think of financial statements as the evidence in a business trial. You wouldn't argue a case without reviewing the exhibits. So you wouldn't advise a business without scanning the numbers. Your ability to integrate law and business makes your counsel comprehensive and valuable. So again, financial documents may seem intimidating. Part of this is they are filled with jargon, like amortization. It just means spreading costs over time. Or accruals. That's just recording expenses when they're incurred and not when they're paid. And there's endless columns of numbers. But again, I'm offering a framework designed for lawyers, not for accountants, so that these documents become your tools of clarity, not confusion, and certainly not dread. My job is to demystify them by focusing on the big picture. What do these numbers mean for legal risk? How can you, a lawyer, spot trouble without a finance degree? Amortization, for example, affects how long-term assets like patents are expensed, and that impacts profitability views. Throughout the season, we'll focus not just on accounting minutiae, like debits and credits, which are bookkeeping entries, but on practical techniques for extracting what matters for business decision-making when you're in the lawyer's seat. For example, I'll teach you simple ratios that act like red flags in a contract review, such as the current ratio, which can gauge short-term solvency. And don't worry, you don't need to become a math expert or memorize any complex formulas. If you know the terms, you can easily look them up. And we'll zero in on the essentials that will give you clarity and confidence by using real-world examples and step-by-step breakdowns to make concepts accessible. In this course, you'll learn how to spot warning signs before they become business hazards, so you can be a legal superstar. You can interpret what are the key financial statements, what they really show, and you'll be able to communicate more effectively with your clients and, importantly, colleagues across legal and business divides. So if numbers make you anxious, start small. We can grab a company's financials from an SEC filing and just read the summary and build from there. But by the end of this season, I guarantee you'll feel equipped to handle financial discussions. You'll be able to turn your potential weaknesses into professional strengths because you'll be one of the few lawyers that can talk the language of business. Hey, take a moment and think about it. Is there a financial term you've encountered recently that puzzled you? Maybe something you read in the Wall Street Journal? Think about it. We'll clarify it, and many like it. The stakes have never been higher. Today's economy is interconnected. It's marked by rapid technological change, global supply chains, and heightened regulatory scrutiny. The inability to read the numbers can spell disasters in matters from corporate governance to boardroom negotiations, to transaction strategy to compliance advisory. Consider the post pandemic world where inflation has raised costs, supply disruptions have strained inventories, and artificial intelligence has shifted revenue models, making financial health more volatile than ever. Clients expect attorneys not just to know the law, but also to understand their business realities. And this course is going to help you do just that. We're already seeing litigation trending up. In 2025, as a result of ongoing economic uncertainties, there's been an increase in lawsuits over fiduciary breaches and fraudulent conveyance. And they're often traced back to ignored financial signals, which again are in the basic statements, right there in black and white. Regulators like the SEC are cracking down on disclosures, requiring more detail on risks ranging from climate impacts to environmental social governance. And boards demand counsel who can spot insolvency early through cash flow trends. This is not a session about becoming a CPA, but about building the financial confidence that defines a modern lawyer, one who bridges law and business seamlessly while providing advice that's proactive and grounded. This 11-episode masterclass will build progressively, starting simple and layering in business applications. We'll use consistent analogies to make it stick. I'll refer to the balance sheet as a snapshot of a business at a moment in time. And we'll talk about the income statement as a movie showing performance over a period. And the cash flow statement gets you behind the scenes, revealing where the real money movement is happening. Here's how we're going to proceed. In episode 2, I'll use some Star Wars analogies like Han Solo's smuggling business to bust jargon and make terms like assets and liabilities approachable, with plain English alternatives for those who are not geeks like me. In episode 3, we'll dive into the balance sheet by looking at how business risks like insolvency can be found through assets and liabilities. In episode 4, we'll explore the income statement, the movie, spotting when earnings lie and mislead. In episode 5, we'll go behind the scenes and examine the cash flow statement, the ultimate check on profits. In episode 6, we'll connect the dots with forensics to learn how to uncover fraud and find deeper risks. In episode 7, we'll apply financials to boardroom fiduciary duties and oversight. In episode 8, we'll decode M&A deal structures through a Episode 9 will navigate securities law, where disclosures turn numbers into financial obligations. Episode 10 will get us into strategy, when we'll talk about bankruptcy and financial distress. And finally, with episode 11, we will recap the season and show how your newfound fluency bridges law and business and how you can leverage this for your long-term career advantage. Each episode includes real cases with storytelling details, practical tips, exercises to try, and I'll offer some reassuring guidance from time to time with the hope that it will empower you, because I do understand that numbers can feel intimidating. But I'll try to get past the numbers and relate you as a lawyer to a lawyer talking about concepts. So in episode 2, we'll make financial jargon fun and memorable with Star Wars. Think of the Millennium Falcon as an asset and the debt to Jabba the Hutt as a liability. I hope that will set you up for the rest of the season. And if Star Wars isn't your galaxy, we'll have straightforward alternatives too. Until then, maybe reflect on this. What's one area of your practice where financial insights could bridge law and business better? I'd recommend you jot it down and keep it as part of your motivation, but I think you'll discover we'll cover it as well as many other dimensions. And if you're interested in an exercise you can do now, you can go over to Edgar and pull a financial summary from an SEC filing and just skim it. You might not have looked at one before, and just getting exposed to it will give you a little bit of context you can use to better understand the lessons. There's no pressure. It's just about building familiarity. In closing, financial literacy bridges law and business. And through this course, I'll make you a more effective advisor. So I hope you stay curious because the journey starts here. I'm Professor Oranburg, and this has been Organized.